The 2022 Bay Area housing market has come out on absolute fire. And the question on a lot of people's minds is, why are there so many buyers? And how are there so many buyers? Well, that's what we're going to cover on today's Silicon Valley Snapshot. With home prices climbing and interest rates climbing in tandem with it, it would seem logical that a lot of buyers would be tapping out right now, that we'd start to see a decrease in demand. But that is just simply not the case. And we're going to go into exactly why that is and how we expect the housing market to continue to thrive, at least in the first couple quarters here in 2022. But before we get into the numbers and the data, if you're a home buyer in today's marketplace, you're looking for a comprehensive data set to help you with your home buying decision making, you can text the word data plus the zip code, your property address, any area or neighborhood that you're interested in, and we'll text that data straight to your inbox. And if you're a home seller in today's marketplace and you're wondering, is now the time for me to sell my home? When's the right time? And when I decide to sell, what's the right pricing strategy? Well, all of that will be delivered straight to your inbox when you text the word data plus your property address to the number down below. Great article coming out of housingwire.com this month titled, "What are the drivers of housing demand in 2022?" And a lot of the points made in this article very relevant in today's Bay Area housing market. So it's fascinating because they start off by saying housing demand in 2022 is anticipated to remain steady given familiar demographic, workforce, and familial dynamics spurred by the pandemic. That's a lot of fancy words there that we're going to break down for you in a second. The article goes on to say the median age of a first-time buyer for the past 3 years has remained 33 years old. Between 1981 and 2018, the median age of first-time home buyers has ranged between 28 and 32. There are 23.4 million adults aged 28 to 32 in the U.S. right now, the largest number of adults by age category. There will soon be a wave of potential buyers aging into the first-time buyer age group. These young buyers are not without headwinds such as low affordable housing inventory, rising home prices, and student debt. The part that really sticks out to me in this article is the fact that the largest segment of all adults in America are the prime buying age right now, or are about to be in the prime buying age right now. You have to remember the individuals who are now in that age bracket, 28 to 32. These were individuals who were in high school and college during the Great Recession. And so when when all of that was said and done, they came out of it. So they were not as affected as the previous generation that was starting to work during the Great Recession. That generation is now past. And so these potential buyers are coming out of college. They came out of college. They've been in the workforce. They have never known bad time. And that has helped them work into better financial positions than their predecessors in the previous generation. But you might be asking yourself, how does a 28-year-old have enough money to put $200,000 to $400,000 down on a down payment? Well, interestingly enough, NAR data shows that first-time buyers have overcome rising home prices to patch together a down payment through diversifying their down payment source, using savings, down payment help from family and friends, and stock market and or 401k loans. And this is actually very true. In this market right now in Silicon Valley, Bay Area, we are seeing the majority of our first-time home buyers coming in either with diversified assets, meaning they've got stocks, they've got crypto, they've got all of this investment stuff that a lot of 20-year-olds didn't used to have. And not only that, but they also have help from family. And that is something that a lot of people do not talk about. But it's true. A lot of the clients that work with Selling Silicon Valley who are first-time home buyers in their 20s do get some sort of assistance from their family when buying their first home. And so all of those different factors combined do equate to a large percentage of the people who are in that prime 28 to 32 age buying bracket having sufficient funds to buy a home here in the Bay Area. Even though it's expensive, they still got the money. So in essence, the prototypical first-time home buyers, the foundation of any housing market, we have more of them now and are about to have more of them now more than ever. And the largest segment of Americans right now is in that age bracket. And so we are going to have an increase of potential home buyers, not a decrease, but an increase in potential home buyers just simply based on age. The article goes on to say the U.S. Census Pulse survey says 23.5% of households had at least one family member who worked remotely due to the coronavirus. Basically, the whole point of this section of the article is to show or reinforces the idea that a lot of buyers are moving out of an urban environment, going to places that are a little bit more affordable in the suburbs. And they're okay with that because they no longer have to commute. And so they no longer have to sacrifice their time. And because of that, they're able to go buy something, buy that investment, and move out of the more expensive urban areas. We've seen this already negatively impact urban areas like San Francisco and Manhattan and a lot of other urban areas that were once flooded with 20, 30, 40-year-old renters who would traditionally buy, but because they don't want to sacrifice their time, they want to live close to the action, they want to live close to work, they sacrificed buying a home. But now they're like, hey, it's okay. I don't need to buy the $1.5 million home in San Francisco. I'll just go across the bridge and maybe out to Castro Valley, or maybe I'll go out to Tracy, or maybe I'll go out to Mountain House or whatever, or up into Marin and into other parts of Sonoma. And they're okay with that now. They're okay with buying the $700,000 to $800,000 home. They've got the money for that. And more importantly, now they no longer have to sacrifice time in a car and commute every single day to work. And finally, family dynamics are playing a huge factor in terms of housing demand. In fact, last year, a desire to be closer to friends and family ranked as the top reason for repeat buyers to purchase a home and for sellers to sell a home. Support systems are now a top priority for neighborhood choice, edging out both convenience to job and affordability of homes. We see this play out in multiple ways here in the Bay Area. Number one, yes, during the pandemic, because of the work from home situation, we had a lot of people deciding to move closer to family. And so they got out of the urban areas and into suburbia, or maybe even vice versa. But most of them moved out of the urban areas and into the suburbs to be closer to family, closer to friends. And this also works in reverse, though. And if you've watched previous videos of mine, you'll know that I often talk about the reason for housing supply being so low in the Bay Area is because the traditional move down seller, in other words, the person who has lived in their dream home for 20, 30 years, the kids are out. They now no longer need the 3,000 square foot home. They prefer a 1,500 square foot home. Those sellers don't sell right now. The reason being that their home is $3-4 million, $2 to $4 million. And in order for them to downsize to a 1,500 square foot home, it'd basically be the same price. And so they're going to basically sacrifice a space and not make that. They're not going to have anything in their pocket to show for it. And so because of that, because most people are in a situation where in downsizing and then paying off their loan and paying any capital gains tax, they're left with only enough money to buy like a 1,500 square foot home in the same neighborhood with no money in their pocket. And so that's not a traditional downside situation. Traditional downside situation is I get to put a significant amount of change into my pocket and use that to live the rest of my life with. And so sellers are opting to stay in their home. Potential sellers are deciding to stay in their home, and they're staying here. Why? They got family here. They've got friends here. They've got roots here in the Silicon Valley. If they don't, if their kids or their family or whatever, they're somewhere else, they're instantly going to that state. They're instantly leaving this area. But for the vast majority of the people who have not sold their home that would traditionally downsize in this market, the reason is because they're using their home as a piggy bank, taking out equity as needed, and in turn staying close to the family and the friends that they love so much. And so this is working in multiple ways. We have buyers moving closer to family, and we have potential sellers not selling because they want to stay close to their family. You see, when a lot of people think about the rates impacting buyers in a negative way, it definitely does make an impact on buyers' purchase power. However, as this article just points out, we're seeing more and more buyers come of age. We're seeing more and more potential buyers come of age. And so we're thinking of buyers as a finite number. It's not true. In fact, the number of potential buyers is growing day after day after day. And so even if some of them, the affordability comes down, there's still plenty more to kind of fill their shoes. And that's the inconvenient truth. in this market is that if you don't buy it, someone else will. I'd love to hear your thoughts and your comments in the comment section down below. It's interesting. The buyer demand never seems to go away in this market. Demand seems to stay fairly consistent year after year after year. What truly impacts this market, and I've said this in many videos before, are the inventory levels. And as we're seeing right now in real time, the inventory levels have never been lower. And so could demand falter and wane as the months go on due to rising interest rates? Absolutely. As this article just pointed out, though, there are plenty of other buyers waiting in the wings right now, waiting for their shot. This is Danny Gould, everyone, selling Silicon Valley, and I will catch all of you in the next video.